My name is Andrew Stotts of the Valuation Masterclass Bootcamp, and tonight we're going to have a presentation about a company actually I don't know that much about, Daimler Trucks, and I'm looking forward to it. One of the teams focused on this company in the latest Valuation Masterclass Bootcamp, and one of the students from that team is going to be representing, and the student's name is Zishan Ali, and I'm going to bring him in right now, and let's get started. So first, Zishan, how are you?
Hi Andrew, I'm doing well. How about you?
I'm doing excellent. I asked you before this how many hours you spent in the Valuation Masterclass Bootcamp, and you told me 170. It's
Yeah, it
incredible.
was insane. Yeah.
You were saying, what did your mom say? You're crazy.
She said, "What are you doing? Like working full-time job. This is insane." So I so I say, "Yeah, this is I need. This is the like thing I should do because this is what I'm passionate about." So yeah, okay, do it.
Yeah. And you're somewhat unique because you've already been through some of our work on the Valuation Masterclass as an independent study, doing your own discipline work. So I
Hmm.
was already impressed that you did that. But then to see you come into this boot camp, I was really excited. And, I always wonder, our students going to make it, but I didn't have that doubt with you, from the day that you came in. So it's been great to re-engage with you, and I'm excited, to hear your presentation tonight. So are you ready?
I'm also excited. Yeah, I'm ready.
Yeah, I think so. And for all the listeners out there, for listeners and viewers, whether you're listening and viewing this live or whether you're watching it as a replay, feel free to ask any questions in the chat, in the comment section, whether it's playing live or afterwards. We still see those questions and we'll respond. So feel free. All right, I am going to share your screen and bring it up here. One second. Hold on.
Hmm.
And I think you're ready to go. So in just a second or so, I'm going to take myself out. But again, I want to welcome everybody on. We've got some nice wishes coming in for you. Here we go. All the
Thank you,
best.
everyone.
Yeah, you go. Yep.
Okay.
So lots of nice words coming in. Way to go. So got a lot of support out there, and now it's time to kick back and relax and really get into it. I'm going to take myself out of the screen now,
Hmm.
and then you just take over. Ready?
Okay. Yeah,
Let's
yeah, I'm
do
ready.
it.
Okay. Hi, my name is Zisha, and today I'm covering Daimler. So I initiate coverage on Daimler with a buy recommendation based on target price of 0.41, which implies an upside of 11%. I derive my target price from DCF best valuation using a WACC of 6.3% and a terminal growth rate of 2%. Here are some highlights that I'm going to cover in detail in the next slides. Stronger in North America, but tapping into the opportunistic Asian market. Second, EV is just 1%, but diesel powertrain would continue to drive growth. Initially, an increase in electric trucks could hurt margins. Now, there are some risks. Unexpected supply chain disruptions, lack of adequate infrastructure for electric vehicle, and single sourcing for raw material. Let's move forward. Let's know what is Daimler is actually. So Daimler is a German multinational company that manufactures and sells commercial vehicle with a product range of trucks and buses. It has production facilities in 42 different locations and sells its product in 160 countries. Highest player in the North America with 40% market share. Company has a goal to transform itself into automotive commercial vehicle into by 2040. So by the end of this page, you should be able to answer this question: what's ahead for the Daimler? Is it electric trucks? But what about margins? So let's start. Stronger in North America and tapping into the opportunistic Asian market. With 550,000 unit sales in last year, Daimler is a major player in global truck market. Its largest revenue streams comes from North America, which is 44%. Asia is the fastest growing region. With its significant potential, India is the key focus, as evidenced by the plant expansion of the Oregon plant to 45,000 vehicle capacity. Now, talking about some like metrics, strong financial with ROE and ROIC at 18% and 12% demonstrate shareholders' value creation. Facing tightening emission regulation, company is transitioning to EVs while maintaining diesel as its current mainstay. So right now EV is just 1%. So I can say diesel powertrain would continue to drive growth. So with this 1% of total sales unit, the company goal to sell 60% of emission-free vehicle by 2030 appears too optimistic. Limited battery capacity, scarcity of lithium resources, and lack of charging network pose challenges. Now, what company is doing to confront these challenges? Company is actively taking steps like investment and strategic partnership, which ensure like battery supply and to build infrastructure. But here is the thing: while the company vehicle are sold in 160 countries, developing markets could be a decades away from having the infrastructure to implement a massive EV rollout. So, not to blame EVs, but the company could maintain revenue growth with its current mainstay, that is diesel powertrain, for a couple of years ahead. Now, if company is going to increase the share of electric truck markets, then it could hurt margins. Why I'm saying that? Because battery are a significant cost component, making EVs pricier than traditional vehicles. However, there's a good thing. Increased demand can lead to economies of scale, which can potentially reducing battery cost. Now understand what is happening in the industry. It is expected to grow by 9% annually until next 8 years. Now, here are some key factors which is helping to grow industry. Growth is expected to be fueled by the booming e-commerce, infrastructure project, and industrial expansion. Again, Asia Pacific is the fastest growing regions, driven by the rapid industrialization, massive population, and government support. China is the leading market for electric trucks. So China is everywhere, right? Again, emission regulation and innovation contributing to EV rise. With the rising preference for electric and emission-free modules, sales of electric trucks are expected to boost in the second half of the decade. It's noteworthy that the global zero-emission vehicle, that electric fuel cells and hydrogen vehicle surpassed US $7 billion in last year and is expected to reach $61 billion by next 8 years at a CAGR of 30%. That is massive. Now there's a hurdle, which is a profit margin reduction that I have already covered in the last slide. So, but improving battery technology, expanding charging networks, and growing clean transport demand can boost post 2025. So, let's jump on some data. Like I have done all the text, so it's a good time to jump on some data. So, here is last 5 quarters data, and company saw a 4% YOY increase in gross margin and why decrease in EBIT margin. So why is it decrease? Because ongoing R&D expense. But if you can see in the last circle, gross margin, operating margin, net margin, that's quite stable. But see it along with the consensus estimate, what market is thinking about the company. So over 85% of analysts have issued buy recommendation of Daimler. The mean target price indicates a potential 36% of side. That's quite high. That means market is very positive, and me too, right? So consensus also predict a decrease in revenue growth from almost 10% in 2023 because of the ongoing supply chain restriction. But that's going to uplift by next couple of months. So move forward. So here is some revenue background that will help you understand where companies generating its revenue. The largest revenue generating segment was Daimler Trucks, contributing 52% of sales, followed by Mercedes-Benz 36%. Daimler's revenue is derived from various geographic regions, with North America, Europe, and Asia. You can see these beautiful charts. Like North America is like holding the very largest share. So let's move ahead. These are some analytical part of the presentation. So DTG, that is Daimler, if we compare it with the 230 companies in Germany, then it is look very unattractive. This is falling in the last 30%. But if we focus on the only fundamental, then it's among 50%. Why what is factor that is keeping in the 50%? That is the because company is working on the profit margins. You can see 60.8, now it is 6.9%. Now there's a big risk which is high debt to equity ratio that companies should look into. So if you compare company with the global companies, 1,440 companies, then where company stands. So company is improving. You can see from 5 to 4. That's when companies like stepping ahead slowly. Now it's staying in the top 40% countries. So what is the key driver factor that is helping company to move forward? And you can see expense control and expense direction. Company is doing really good. Other factors are quite stable. So here is some financial data. And based on my projection, EBIT is quite stable, and net fixed asset I forecasted on the increasing side, because I think because companies transitioning and they have to replace all the machinery to produce the electrical vehicle. That's why I forecasted this in this manner. BVP, that is book value per share, this is increasing from 19 to 27 and 27 to 37.8. Is capital expenditure same. Case convergence cycle, that's helped to understand what is the cycle in the company, and it's pretty stable. Gross profit margin, if you can see, it's also stable, and I reduce to 20%, because I think in the coming years there could be like high battery cost that uh, will squeeze some profit, and again high R&D costs will squeeze the bit margin. That's why I'm keeping it low as compared to like 23, 24, and 25. ROE is most important factor, because that's what equity shareholder focus on, and that is quite good, 14.5%, and it is down from 18. That's because profit margin is going lower from 6 to 5.6 because of my projection, like higher cost of EVs. NOPAT is quite stable again. So now moving forward to valuation, where is my valuation falling? So starting with the relative valuation, on a forward P multiple, Daimler trades at a discount compared to industrial sector in the Germany. You can see P ratio is 8.5 as compared to other markets. That's mean it's cheaper, or it's on cheaper side. But if you see the EPS growth, that is quite low, 6.5. So P peg ratio, to consider peg ratio would not be a like ideal ratio in this case. But if you can see it's other multiple, that's PB to ROE, then it's a good metric, because company is considered at a lower side. That's mean it's a cheaper, and ROE is quite high, 14.8%, very close to Germany market, which is 16.4%. So what is the my final valuation like values? So I assume a risk-free rate of 2% and equity risk premium of 6%. I anticipate GP margin of 20% until 2028, leading to value of 41 euro, and this represent an upside of 11%. In my sensitivity analysis, that's on the this page. If you see, if if I take 22% as against 20% of the GP, then price would be 51.2. And if I took less, less than that, 18%, then the price would be 31.5. That show like how price will move as per the sensitivity analysis. So after all these good things, here are some risks that we should consider, because no industry is exempt from the risk. So supply chain is the biggest risk for the company. Daimler business heavily depends on its smooth and interrupted supply chains, and we have seen that in the COVID era. And unexpected supply chain disruption and limited availability of batteries caused by natural disaster, geopolitical tension, or component shortage could lead to delayed production schedules, unfulfilled orders, and potential loss of market share. So it was me, Zisha. Thank you very much.
Excellent. Um, it's kind of interesting how stable the business is. I always think of automotive as very volatile, but maybe it's because it's commercial trucks as opposed to, having exposure to, let's say, the consumer cycle. I'm just curious, have you looked at that at all? Like, are commercial trucks less volatile as far as the volume that they're selling than consumer vehicles?
In case of Daimler, it's very stable, like from last 2 or 3 years.
Right. Um, let's go through some of the questions that we've got.
Mhm. Yeah.
So Prowl says, the mean of consensus estimates the target price around 36% upside, but your target is only 11. What's the reason
Mhm.
for the difference?
Yeah, analysts assuming that profit margin will go up in the next couple of years, but I take a opposite direction. I thought with the increase of the EV share in the market, it could like squeeze the battery components because the battery is higher, is costly. That will reduce the COGS. That will impact the gross margin. That's the difference.
Okay. Momin had a question about your WAC. Why don't we go back and look at that? I know it is quite low at about 6.2.
Mhm.
Uh, Maybe just talk
Yeah.
us through kind of what your thoughts are there.
Yeah, risk-free rate is based on the 10 years German market bonds, which is 2%, and risk premium is 6% as per the uh, DELF reports. And because companies, this is traditionally bit on higher side, beta, it is risky. So why? Because it is considered like in the long term, company will be close to one ratio. So I took a bit low, which is 9.2%. Now, reason why WACC is low because company have a higher debt, 37.5%. You can see here, which is reducing the WACC to 6.3%.
Okay. So let's why don't we look at the ratio page? Maybe go up a couple of pages.
Hmm. Yeah.
Yeah. And see the debt to equity, net debt to equity. It's yeah, I wouldn't say it's extreme. It's a little bit high, but I wouldn't call it extreme. Um, okay, let's why don't you go to your go let's say let's look at this question that's come in, and that is from Priyanshu says in 2023 EBIT almost doubled. Could you elaborate what that was about and how do you think it's going to be? So we can see on your slide that EBIT. Wait a minute. If you just go right back to that one you were just on, so
Hmm.
EBIT margin went from 5.8 in 2022 to 9.1. So a big jump. And
Hmm.
then you're expecting 8.7, 8.4, 7.9. Tell us a little bit about, what's going on with the EBIT margin.
Yeah, so company disclose it in the annual reports. They disclose that because of they offered higher price as compared to last year, as compared to 2022. That's why their GP margin is higher. You can see, and which is translating in the EBIT margin 5.8 to 9.1%.
Mm. Let's go back to your story slide. And I'm going to bring up the question from Ibrahim Quadri. And he said EV is quite popular in North America, or that's what he's thinking.
Hmm.
Having just 1% EV sales seems too low. So maybe we can go to that question as well as just reinforcing the answer to the title of your slide. What's ahead? EV electric trucks. What about margins? You've already explained that
Hmm.
a little bit about margins, but tell us more about what really is going to happen with EV based upon what you see.
So in annual report, company disclosed that they sold 4,000 vehicle in last year, as compared to 536 units. That's become 1%, and that is quite low. But the scene is going to be changed in the next couple of years, because EV is like hot topic these days, and company is working on that. Even emission regulation is forcing company to limit the diesel trucks and to focus more on the EV trucks. So in the last year, or this was not on the higher side, but we can see like it can be 5 or 10% in the coming 2 or 3 years. Yeah.
Okay, but it's not going to be 50%.
Yeah.
Okay.
Right.
What is the company saying it's going to be?
Company is targeting 60% by 2030. That is I don't think it's possible to reach.
Yeah.
Yeah.
Okay, let's go to your front page and then we'll wrap it up there. You got a question from Moman, and he said, "Stock's been going down recently. So, what would be the catalyst that would bring it up again?" So, talk to us about
Uh,
the share price. We see there it kind of was hovering between 25 and getting close to 35, and then it broke out up to 45. Now it's back down to 35 or so. Uh, yeah, what are catalysts or what's going on with the share price?
until now, the company was struggling with the net margin. It was 6% in the 2022, but like I told, like last year it was 9.1%, and company is offering better pricing offer, and I'm very positive with the like what is coming ahead with the companies. So that's why it will help to improve the share price also.
Okay, great. Hold on one second. So, how does it feel to graduate from Valuation Masterclass Bootcamp?
Yeah, I'm feeling really good, fantastic.
Tell me about the transformation that you've gone through.
Yeah, this bootcamp is really helpful for one who can like who is coming from the scratch. But I did this class earlier, so I was very comfortable doing that. Like, but I would like to highlight one thing, that doing defense part of the like research and jotting down in one story is quite interesting, but it takes effort. But la, at end of the day, like this is satisfying. Yeah, I would say that.
And if you were to look at one skill or one strength that you've gained from this, what would be the one thing that you've really improved in?
Storytelling, I worked on that a lot, because I company story I like reworked, and this is the like I'm comfortable with this one. Okay, this is the good one.
And why do you see the importance of storytelling? You know, I mean, I talk a lot about it, but what do you see about the storytelling aspect, maybe compared to your peers or what you did in the past?
Storytelling, yeah, this that is very important in every business, because if we reach on the top level, then we have to tell the stories of the company, how company is doing and all that. So that is very important in the any business, and for the equity business analyst, that is a crucial part, because story is everything. What do you think about these stories? What
Mm,
do you think about the company? That is the real thing.
yeah, it's exciting.
Yeah,
Well, you should be very proud of your work and your success, and I'm proud of what you've done. So,
thank you.
time to take a little rest and tell your mom, I'm going to rest a little bit now, mom. I'm going to get sane again.
Yeah, yeah, yes.
All right. Fantastic. Good job. And I'll see you in the group.
Thank you,
Uh,
Andrew.
all right. Hold on. There we go. Wow. Another great presentation. And as I said, I didn't understand that. I don't know that much about Daimler trucks. So I thought that was interesting. In particular, what he was saying, how their targets for EVs are really aggressive, but he doesn't think that they're going to get there. If you want to build a competitive strength in company valuation, why not take the valuation masterclass boot camp like Zishan did and build that strength in the boot camp? I hope to see you in the boot camp in the future. And what a great presentation that was. My name is Andrew Stotts, and I'll see you in the